Good evening, everybody. All right. Looks like we're going to get some snow here in Pittsburgh tonight. All right. We already snowing in New Jersey. Jeez. We kind of expected today's trading, not to the magnitude that it traded, but notice what was happening. Notice how we can analyze what's going on in a trend. First of all, we had an evening star signal. They tried to bring it back up, failed to get up to a new level. Sound is very low. Is that for everybody? So we kind of could anticipate a rolling over. Not so much from the Dow itself, but we saw in the other indexes. For example, the NASDAQ on Friday already started rolling over as a bearish J-hook pattern. So when we woke up this morning, it was fine at the previous level. So with the S&P rolling over, already setting up for a bearish J-hook pattern, and the NASDAQ doing the same thing on Friday, that when we got up this morning and saw the pre-market futures were down, they pretty much told us which direction or what type of pattern we were going to be doing. So now, because they did a doji today in the NASDAQ, very simple. If they open up positive, there's probably going to be a bounce. They're using this area as support. The Dow, which was just out of this downtrend, or this bottom of this channel, is getting up close to it. So if they open up positive, that means they're probably bringing it back up into this trend channel. Doesn't necessarily mean they're stopping this pattern. They're just kind of now slowing the rollover. So today, crude oil prices also was continuing what we can observe as the obvious, that there was an obvious downtrend. So where's our next target for crude oil? Could be down here in this area. Now, remember, this is why you want to let the charts tell you what to do. Remember when this crude oil was trading at $115 a barrel, everybody said it was going to 200. Now they're saying it's going to $20 a barrel. I'm just watching to see what the chart tells us. And gold has been a very good profit trade for us here in the last few days because of this big pattern right here, this big fry pan bottom. Now, it took profits on some of our trades on the gold area, like Nugget, because look what Nugget did today. After trading up pretty strong most of the day, it closed back here as a shooting star. So what do we got up here? We got an overbought condition with a gap up shooting star. That's pretty much telling us we better be careful. I mean, the worst case scenario is if it opens positive and starts trading positive tomorrow, we can always buy back. So what we have to be concerned about is them opening lower. Now, as we can see in gold tonight, after hours, they're already trading down a little bit. So this could be that at least where they do a cup and handle, which means they might pull it back for a few days. Oh, I don't know what the target is for crude. I mean, that looks like the logical spot, but I'm just going on the basis of where would be the next target down here at the bottom of this of the trend. Now, you can see after hours they've opened it up a little bit, trading positive. So this makes for a very easy entry strategy. You can tell there's a support level right here. If you put a sell stop just right here, I don't know what that level is, at 29.50, let's say, if it came back down through that level after opening positive after hours, that's pretty much telling you what that pattern's going to be. Can't see the stochastics. Here are the stochastics. All right, we also shorted wheat today because of the obvious. The obvious was there was a downtrend. They were having a hard time getting up above the 50. Stochastics were heading back down. And so when you can see a trend like this, it's very easy to kind of think, all right, if we can see it just by glancing at it, there's pretty much your trend channel. So where was the next likely target? Right down here. So this made it an easy short today with stochastics heading down. We had a bearish engulfing, both right on the 50, and they're selling it off, not in the oversold area yet. I'll start watching down here to see if that's the target. Same scenario with coffee. Coffee sold off at the bearish engulfing signal, and where did that bearish engulfing signal occur? You can pretty much draw parallel lines right here. So where's the next target? Down here. So again, the advantage of being able to use technical indicators like trend channels is we can see exactly what happens at the top of the channels, and we can start looking to see what happens at the bottom of the channels, what type of signals we'll get. Now, we had shorted cattle, live cattle, because we also had that prospect of, where's my trend channel? And right down through there, now you got kind of a trend channel down through here. So here's our first target, and here's our second target. So this isn't rocket science. This is just taking advantage of seeing what signals are happening at a support or resistance level. And now we've had that evening star signal with a gap down. It was down the limit today. So when they start doing a signal and start gapping it down, that's usually going to have a lot of force to it. So we also, whoops, did I do that wrong? Oops, this is the Aprils. We actually shorted the March, well, shuzbutz. Maybe it was the February. Well. That's just a fine howdy do. LHAH6. LHAJ6. Or maybe it was this one. All right. Is there a symbol for cattle? Yeah, the ETF Sal is cow. And then on TOS, which is what I use, it is /GLEJ6. All right, so after they took hogs up today, they brought it back down and closed near the lower end of the range. Now, sometimes you got to watch the charts on some of these services, because this one is showing that it did close there. Sometimes they show different prices than where they actually closed. So on the 10-minute chart, you can see it had rolled over. And the reason we went short today is this is kind of a pattern that you want to recognize. This is what we call the spreading pattern, that you have 0.1, 0.2, 0.3 higher than 0.1, 0.4 usually should be lower than this one, then 0.5 is right at the tops here, And then when they start selling off from there, it's usually a good hard sell. So we shorted this one, made a good profit, covered it, and re-shorted in here, and we'll stay short on the basis that we anticipate they're going to open up the prices lower. And so this is where you kind of project where your targets are. Yes, they work equally well on the E-minis, Frank. Hold on, I'll get to that too. Oh, I can take this thing off. So if they open this lower, where's our projected targets? Well, the first is the 20, the second is the 50, and this is where you can come on and put your Fibonacci retracement numbers on. So if you put the retracement numbers on, here's one level, here's another level, here's another level. So does that mean it's going to get to any of those? Who knows? But at least with these on there, if we see a buy signal forming right here, we know that that retracement number is one that is the one you want to start covering your profits. Here's the E-minis. As you can see, they were doing a bearish J-hook pattern, and they're down some more after hours. I guess the YMs, which is the Dow, also down a little bit after hours. So this still tells us that they might not be yet trading out of this bearish J-hook pattern. So as we saw near the end of the day, we started picking up some strength. And this is where E-minis can be traded just as well as anything else. I went to the 10-minute chart, and the 10-minute chart was starting to look like this. So then you flip to your 5-minute chart, and your 5-minute chart is also confirming. And so if I'm ready to buy, then you flip right down to your 1-minute chart. If I can find where that was. There's kind of your 1-minute chart. So this 1-minute chart looks just like a daily chart or a monthly chart. So bought in here, and on one contract going into the end of the day, I think I picked up $700 just from riding it up from that that last little run up that we had. So it's just, again, it's just as easy to trade E-minis as it is cattle, cotton, bonds, or IBM. They all are one characteristic, and that's seeing what the investor sentiment is doing. Okay, so we had recommended Atwood because it's starting to base down here. Had a nice best friend, Doji Gap up. So if you hadn't bought it yet from yesterday, today was a good time to be buying on positive trading. Well, it didn't trade positive. But what we can see is what type of pattern we're setting up. This is why we want to, that's why I keep repeating all these patterns. There's your double doji, which makes this very simple. If they open this positive tomorrow, you want to be buying immediately because you got your best friend, then a double doji, which likely makes your next target the 50-day moving average. So a lot of the oils, Whiting, for example, wasn't acting very well this morning, but closed right near the high, kind of forming a base in here. So this one can still be bought on positive trading if it gets back up above the T-line. And this is why you always want to know what your strongest signals are. This is Boot. You can see what Boot did today after your kicker signal, still making the prospect of going to the 200 or the 50-day moving average very likely. And why? Because the kicker signal is your strongest signal. It's usually going to make that trend a very strong trend. So today traded up positive in a day where the market was very sloppy most of the day. Now here's one that had a good looking chart, had everything going for it, but then today they gapped it down and traded it lower and didn't get it back up above the T line. So that's where you close out the position. Because look what was happening. You had a little kicker type signal, closed below the T line, stochastics turning down. That's just telling you the probabilities are now going against you. Worst you can do is buy it back if it starts trading positive. But right now it's kind of giving us the indication they aren't taking it up with any great enthusiasm at this point. So I'm just kind of going through the ones that we've been working on here for the last couple weeks. SIEN popped up today, but there was nothing to be worried about on this one. Had it opened lower today, yeah, you probably wanted to close it out, but at this point you just stay long just because it hasn't been able to close below the T line. Now, sometimes you're not going to see a close above the T line. So if you were short on this is INCY, was a good short, but notice what was happening down here. This is why the visuals of candlesticks are that much more effective for identifying where support levels are being created. We've seen a left-right combo, a doji, another bullish candle. And where's it all occurring? Right here in the same spot. So what's in stochastic slowly coming up? So if you were short, what would this all be telling you? That they aren't selling it off very much here. You probably want to close out the trade because that, even though it hasn't closed above the T line, it's now becoming a low probability trade that they're taking it down. It looks like they're trying to support at this level. So why stay in something that where you can actually see the buying is occurring? Unlike this one, INSY had a bullish signal, left-right combo. Where was the first move going to be? Probably back up to test the T line. So this is a case where even if you shorted it or covered your short here, somewhere in here, that you could be re-shorting it because what did this tell you? That your little J-hook pattern failed at the T line. You're still in a downtrend. Oh, we did Nugget. Nugget just was getting too with a gap up in the overbought condition, even though we're coming out of a fry pan bottom and this was your likely target. This was too much risk reward or too much risk for the reward at this point. It could go up another couple points, but we already had a huge profit in it. So we just closed it out and took our profits. And SA, another situation where it was moving nicely, traded up, and then closed back below where it opened and the 50. So this makes our analysis very simple. This has to open positive and trade positive to stay in it. If it opens lower, you close it out because what's the prospect of this pattern? At least doing a bobble, so you know it's going to come back for a couple of days before turning back up. But that's anticipating that it's going to turn back up. For all we know, they could start taking it back right back down to the 200 or right back down. So why risk it? If this is the signal and they open it lower, close it out. You could always buy it back if that signal is negated. Let's see. CDE, same scenario. There's that shooting star. Only one thing you can do with this one tomorrow to stay long. It has to open positive and start trading positive. If it opens lower, where do you think it's coming back to? Probably at least coming back. Remember, when a resistance level is breached, they'll usually come back and test it for support. ICON, this one's just a nice chart. They haven't been able to close it below the T line. You just stay long on this one. AU is another one of the golds that did a doji up here. Nice strong chart. Big fry pan bottom. There's your bobble, J-hook pattern. Now, but notice what it was doing up here. First of all, it did a doji. Secondly, look how far away we are from the T-line. So what is your stop loss procedure here? It shouldn't trade back below the low of today. If it does, it tells us where it's coming back to, at least coming back to test the T-line. STRP we've held on to because there's that little J-hook pattern. And what told us to hold on to this one? They never closed it below the T-line, never even did anything decisive to tell us they were going back below the T-line. Let's see. CFX. There's your fry pan bottom. There's your best friend signal. There's what it did today, which wasn't really anything of any great consequence, but also alerts you to the fact that if they open this positive, you could be buying immediately because your double doji is in progress. And why would we suspect a double doji to be in progress? Because what do you get coming out of a fry pan bottom? A very strong price move. Where would be a logical stop at this point? Right back below the lows. If it came back down through that level, that tells us they're coming back to test the 50-day moving average. Con, double doji. Look at all the dojis in here. Now they're bringing it up. A positive open tomorrow, you can be buying immediately and expecting another day like this with a very simple stop loss. They shouldn't trade. They probably shouldn't even trade, let alone close back below the T-line. If it opens positive, it should be moving positive. And WLB needed to stay above the T-line, which I think on the other charts was up a little bit higher. But this one has to open positive tomorrow to stay in it. On CFX, why is it not showing a because that could potentially be a doji, except look at your pattern. And what caused the pattern breakout? Your best friend. So what's the implication right now? That you should be heading in an uptrend. This was just kind of a doji day during that uptrend. Now, until we see that confirmed, and again, if they traded back below this level, that'd be confirming it. But right now, we've got too much of a pattern influence here to say, all right, this was a bearish harami. Oh, not looking good. Don't worry, Big Al. We've got plenty of shorts that we're going to be looking at them. I'm just going through the ones that we've been long here for a little bit to see what we should be doing with them. AYA, another one that if it opened lower tomorrow, where's the likely test? Back here. This one has to open positive and trade positive. Can you trade on con? Yeah, you can. Remember, you can trade whatever you want to, whatever you're comfortable with. And these are the best type of trade breakout or option trades because we know the exact timing of this. It's not like you're having to wait for it to turn up. We know that if this opens positive, more than likely it's going to have a strong day. So that makes for a perfect entry strategy for getting into a trade without having to wait for it to perform. I was showing this one because here's your logic. If you're getting up toward the overbought area, had a nice bullish candle, they shouldn't be trading it, especially back below the low, which is also the T-line. So I'm pointing this out because this is one of my major flaws. This would have taken about 10 seconds to say, all right, what's this level right here? Just for safety's sake, I'm going to put a sell stop at 8:15. Doesn't cost me anything. All it does is cost me the safety of knowing that if it went in this direction, I should be out of that trade. It should be moving in this direction. So this is, I know all of you are writing in your journals every day, but the biggest benefit I got out of writing in my journal was I would never put a stop loss in. Because most of the time I'm sitting here thinking, all right, I'm watching these trades. I don't have to worry about anything going against me. Well, if you got 6, 8, 10 trades going on and something like this happens, you may not catch it in time until it's down here, where all you had to do is sometime during the evening just say, put a good till canceled order at 8:15 to stop out. And you can do that in a matter of a minute with all your positions. Pick out a spot that says, all right, if I'm long this one, where should this not be trading at all? And it shouldn't trade back below this level. If it did after a doji, it's going the wrong way. So just put a stop loss right here at whatever this is, $4. Just pick out a spot that tells you this is not where it should be trading at all. And so back to writing in the journal, I would never put stops in. But the purpose of a journal is to kind of remind yourself what you did right and what you did wrong. So when I started writing in my journal, time after time, put a stop in, and each time I wrote it, it got a little bit bigger and bolder because I was pressing on the pen that much harder. It finally dawned on me, your reason you're writing in your journal, put a stop in, is because you don't do it, so start doing it. So it just kind of helps you with your discipline. And part of my discipline was if I did something that was the normal human reaction mistake, when I got done with it, I said, oh man, that was a bad trade. I took a big loss. I'm not going to do that again. I don't have to worry about remembering this. Well, the reason you're doing it in the first place is because that's human nature and you're going to do it again. So even if you write down what you shouldn't be doing or you should be doing, you're going to do the wrong things another dozen times before you start becoming an experienced trader. Except if you write it down and you go back every Friday afternoon and read, I should have put stops in, that it's going to kind of speed up your discipline, that instead of doing the same mistake 7 or 12 times before you learn not to do it, maybe after the 4th time when you've been writing it down, you'll stop doing it. Anyways, that's what it took for me. Oasis pulled back, but once again closed right here in this trend channel. So it wasn't very decisive today, but we know what has to happen on this one. It has to open positive and trade positive to stay in it. Now ACAT, when it opened lower, where do we anticipate it was moving to? Probably back to the T-line. Well, this opened right almost at the T-line, so we wanted to see what it was going to do from there. Had it closed here at the lower end of the range after a bearish Harami at this perceived resistance level, yeah, we said close it out. Now we still have to make a decision, and that's our simple doji rule. It's going to move in the direction how they open it, so it has to open positive to stay in it. If it opens lower, close out the position. How do you know what stop loss to put on an option? Frank, a lot of brokerage firms will have what they call contingency order, which basically says if this stock goes through, back down through $50, close out my option trade. So it's not the price of the option that you're trading, it's the price of the underlying stock. The option was just the method for buying it. So if a stock is doing what it's not supposed to be doing, put a contingency order, and most of them will do it for you. That if you say, if this stock hits 50, close out my position. I don't know, because I never use them because I'm always sitting here. All right, Sam, look for re-entry on Nugget. So you sit here and say, all right, what has to happen to want to, oh, it's a condition order? All right, thanks, Sam. What has to happen to get in this? It's got to open positive. Well, you're going to probably know how it's going to open tomorrow before the market opens based upon how they open gold. And if gold is trading down, whoops, it's now different. It's trading down after hours. You'd have to see if that's trading down. This is how you see if it's trading down. It's pretty much trading right where it closed, pretty well flat. But if we wake up tomorrow and gold is trading down here, that pretty much tells you you've got some selling going on. You probably don't want to get back into it yet. Did I do ACAT? Well, ACAT. Oh, we did this one. This has to open positive tomorrow. Kinder Morgan should have been closed out today with the gap down below the T line. But now you still watch. If they start trading this positive, you can be buying it and then just watch to see what it does once it gets to the 50. And I know a few people were trading light. Notice when it backed off today, it did a double doji. Makes this very simple. If it opens positive tomorrow, you definitely want to be buying. All right, now on the other, here's one good looking chart, I think. MTX, there's a nice fry pan bottom setting up. You want to be watching this one. All right, now on the other side, we've been recommending going short on Twitter and re-recommended it because as you can see, once they got back up above the T line, it was indecisive and gapped it right back down. They haven't been able to get back up above the T line. Now they've broken this support level. So got to look at this as a wave 1, wave 2, going into wave 3. So we want to be short that one. TRGP was another good looking chart until recently. You can see what happened. Once they got up to this level, did a bearish Harami doji, and then a gap down through the T line. So what's that tell us about this whole pattern? We're in a downtrend. There's the top of your trend. There's the bottom of your trend. They could take this all the way down to this level, which from the $19 level down to the $10 level, that becomes a very profitable short position. Okay, Twitter earnings on Wednesday. So right now you want to be short, but if it's Wednesday afternoon, you're going to be able to tell going into the close whether people are confident that it's going to be good or whether they're still selling it off. And usually they're going to do exactly what the in the money knows to be doing, and that's what you're basically following on these charts is what's everybody's decisions. Big lots, nothing here, you stay short, but another one that if it opened positive tomorrow, at least you know they're probably going to bounce it back up to the T line. And we recommended shorting LendingTree today because you can see that obvious rollover. Your little doji gap or a strong move to the downside, and then notice what they did today. They're not even in the oversold area, and they gapped it down through the support level, which tells me there's probably a lot more downside on this one. BRTX, same scenario. Wave 1, wave 2, going into wave 3. And notice how they're starting wave 3, gapping it down. Usually that shows there's a lot of energy to the downside. And QIHU, nice rollover. This makes for an attractive short on weakness tomorrow because where's your next target? Probably all the way down here to the 200-day moving average. And let me make this smaller. Let's see if this will work. Nice steady uptrend, starting to roll over. So you see what everybody else is watching. Looks like the 38% retracement is right here at the 200-day moving average area. There's your 50%, and there's your 62% retracement. So good probability they could be bringing it back down that far. Is tree too far away from the T line? Nah. Now, these are the type of trades where they could be moving a good distance away from the T line. No, I wouldn't. The T line's not that far away. What was the other one? VRTX. Nah, it's just a good indication that wave 3 is starting. And notice the T line, even when they drop it like this, T line comes right with it. Yeah, Tree had some wide option spreads. I think when I looked at it, they were asking or bidding 240, asking 360 for one of them. So if I was going to trade it, just go halfway in between and let it sit there. GOMG. This one's just rolling over. Observe the obvious. There's the downtrend. There's the resistance. There's your doji, little gap down below the T line. Where's your next target? Right down through the bottoms. They could take this all the way down to the $6 area. And Scotty, just as never been able to get started, there's your bearish J-hook pattern in progress. Another one I wouldn't be afraid to be shorting on weakness tomorrow. Visa, yeah, was part of, I guess, the PCB short. Stay short on this one until you see a buy signal. More than likely, you're getting down toward the bottom of the trend channel, but your stochastics are still heading down, and they gap down to get there. You just stay short on this one. No, I don't watch crossovers. I'm not trading the stochastics. All I want to see is where the stochastics are occurring. Are they overbought or oversold, or has the downtrend started again with a signal telling me there's still more downside? Trading the crossovers, whether it's stochastics or the moving averages, is a different trading method, and it's usually not as effective as seeing what the signals are actually doing. Bearish engulfing on NLK. Wave 1, wave 2, wave 3 could take you down into the $15 to $12 range. Now, obviously, we're seeing a lot of good shorts. This is AEGR. Kind of your, again, a doji gap down. There's your next target down in this area, a good 25% lower. Should both stochastics be below 20? Not necessarily. Again, we're just trying to see where the stochastics are relative. Obviously, to a buy signal right here doesn't really mean that much. We're looking more for potential sell signals at that level. A buy signal up here doesn't mean all that much. It means the trend should be in progress. But as we can see, they've rolled the stochastics over on this one after a shooting star. Where's your next target? There's that first wave. There's the second wave. They could take this all the way down into this area, which I guess would be around the $40 range. And for those of you that are sitting Short on Weight Watchers, you just stay short. UIS. Another one. These are the ones that you have higher probabilities of heading in the right direction. A bearish Harami right at the 50-day moving average, right at the resistance level. You can see the trend channel. They could bring this all the way back down into this area. So the more pieces of evidence that you can visually analyze, the higher the probability. That's what everybody else is watching also. This one had the big dark cloud. Then another little bearish engulfing and a doji. Makes this very simple. A lower open tomorrow, you want to be shorting it, because if this was wave one, which was approximately 25 points, that would take you down pretty hard from here. And BG, you can see the trend channel. You can see where the next likely move is, and you can see where the support is, which means if they start trading it back below today's low, you want to be shorting it, because they're probably going to be moving it down into this area. KMT, there's a nice evening star signal with your doji. John, prices usually just move in waves. So usually when we can see a wave pattern setting up, and I'll find a better one to illustrate it. But this one, notice you had a doji, stochastics rolling over, a gap down to the T-line area. It makes this very simple. If they open this lower, expect a lot more downside. Okay, here's a wave pattern. You can see there was wave one, wave two, wave three. Now what do we have? This becomes wave one. This is wave two, wave three. And wave three on a J-hook pattern usually equates to wave one, and wave three will approximately be about the same. So if this was a 7-point move, a 7-point move from here takes you down into about the $14 area. Now those are just rough calculations, but if you look at your charts, you can see the waves in there. Now this isn't Elliott wave or anything like that. This is just want to see what human nature does. Usually a wave, then a counter wave, and then continue the move with an equivalent wave three. Zion, no. QSR. This is where you want to observe the obvious. You can see they've rolled it over. You had selling in here, and then they gapped it down and closed below the resistance or the support level, which tells you that you're probably got pretty good probabilities they're going to take this one down further. And ZBH. The bigger the signal, the more compelling the selling. You can see there's a big dumpling top. You can see there's a big left-right combo with a big, huge bearish engulfing signal. Now they've gapped down through this level. I'd just stay short on this one until you see a buy signal. And the banks seem to be getting hit pretty hard. There's wave one, there's wave two, left-right combo, there's wave three. Still plenty more downside. And one more on the shorts is ADM. You can see you're in a downtrend. Did a bearish kicker signal, came back up, did a left-right. I would suspect your next move is going to be down here, down into this territory. So again, the more pieces of evidence that you can put into your visual calculation of who's winning, the buyers or the sellers. Well, if they're failing at the 50, they did another sell signal back below the T line. You can see the trend channel. You can see your stochastics are rolling over. Those are the pieces of evidence that we're looking for to tell us whether we've got a high probability trade or not. Okay, that's about all I got tonight. Are there any general questions on candlesticks? Can you talk about why the transportation index is so important to be in alignment with the other indexes to confirm a major trend change? Because usually the rationale is if the transportation index is starting to sell off, that means they anticipate there's going to be a slowdown. So if there's going to be a slowdown, what's the first things that are going to get hit? It's the transportation indexes that are shipping products. So usually when they start selling off the transportation index, it's kind of a prelude to thinking, all right, things are starting to slow down. Yeah, it's kind of acts as like a leading indicator. Do you have a tutorial on how to trade options? Bob, I'm pretty sure we do. I think we got 2 or 3 of them. Just go into the products and services area. There should be 40 or 50 training videos in there. A left-right combo is a doji followed by a bullish engulfing signal. I'm trying to think of where we might find one. There's a wee little one right here. Kind of a doji bullish engulfing signal. So you had a left-right combo, and where did it occur? Off the T-line through the 50. Told us there was probably going to be more upside. Hold on for a second, Bob. But I tell Jim to do the double line, then you can type in your individual requests, and we'll go through them. For this market climate, what ratio short to longs should you have? Right now, I probably would be 80% short, maybe 70% short. The only things that were acting well up until the close, obviously, were the gold stocks. They'd all been moving in the right direction until the close today. The transportation index is usually DJT or DJ-20. Oh, I don't know what it is for utilities. DJU, which they're still holding up. Okay, I guess with that, Jim, do the double line. And in 4.1 seconds, do the next double line. So we've been making good money this week because of gold. So obviously with the market rolling over, gold stocks are still moving up. So that's why in a down market you might not have everything in the short position. DDD, yeah, that's also a little bit worrisome that you've got this downtrending channel. Let me see if it's a downtrending channel. Yeah, you're right here at the 50, which has been acting as resistance. You've got now a doji little gap down rolling over. Wouldn't be afraid to be shorting this one on weakness tomorrow. BIDA stays short. Notice how it failed at the 50. This is wave 1, wave 2. Wave 3 is getting to be about the same length. I'd look for a few more points to the downside on this one. And Angie's List was rolling over. Failed right here at this resistance level. Where's your next target? Maybe the 200, which would be the bottom of this trend channel. So there's kind of your blue ice failure. But if they failed at the 50, that's your next target. Whoops. Let's see, did we do score? Score, you stay short, but you just watch to see what it does right here at this level. You're almost on that support level. You still have more juice in the stochastics to the downside. I'd still be shorting this one, especially if it shows it's not going to support right here. THC, this would be more inclined to think that your downward target is a little bit further away down in this area. Caterpillar, same scenario. You've got this resistance level. You've got a failure here. If I was going to short it, I'd short it below today's low, which would also take you back below the T-line with the anticipation that your bottom of your trend channel is now your next target. Potash, I'd be going short on this one also with the anticipation they're coming back down to the bottom of the trend channel. Micron, stay short. This one was your bearish Harami, gap down. Again, I would look at wave 1, wave 2, wave 3 in this situation. Knee, you stay long. Just use the T-line as your stop. Still a good, strong chart. And Hormel, another one where you just stay long. This would have been one where if you closed it out here, you would have bought it back here because it closed below the T-line after a bearish engulfing. That's pretty close to your left-right combo, a little indecisive trading day. So you did have a bearish engulfing signal, but that's now become negated when they close this more than halfway up this candle. It's pretty much telling you this 50 area is acting as support. HTS, get ready to short this one on weakness. Now I say get ready to short this. The volume in some of these stocks have to be reasonably good for them to have enough volume to where they can find the stock to short to you. SRC, another one. If it opens lower tomorrow, you can go short. CRS, that's a good looking chart as long as the volume is good. I'd be buying this one, but just be very conscious of what it does at the 50, which is also this little resistance level. Motorola Solutions, you stay short on this one. Especially if it opens lower tomorrow, you've got a bearish doji sandwich. You'd be coming down to fill this gap, which almost did today. But then I would suspect your next target is going to be testing the lows. Costco, that's your left-right combo. Doji, bullish engulfing signal. Usually a very strong reversal. Now, if this opens positive tomorrow, you can be buying. Just make sure it gets through this downtrending channel. Western Gas Partners, stay short. You can be going short on this one if it opens weaker tomorrow through this level. Zebra, you can be going short on this one. Also looking for the bottom of the trend channel, not too far away. Win, you can short this one, going back to the bottom of the trend channel. There's the top of your trend channel. There's the bottom, taking you down into this area. Amazon, stay short. You had a gap down doji, which makes, and you're in the oversold area, which makes it very simple. You just put your stop at today's high. It should be trading lower. If it opens and trades positive, at least you know they're probably trying to bounce it back up to the T-line. Facebook, I would suspect they're still heading down to the 200-day moving average. If you're short, again, use today's high as your stop. The Qs, Same scenario. Use today's high as your stop. It should be opening weaker. I think, didn't we just see the, all right, right now the, is the YM's down 100 or is it down 10? Can't tell. Salesforce just stays short. There's your kicker signal to the downside. Even though you're moving that far away from the T line, they've gapped it down. This is usually your exhaustion or your exuberant panic selling. So if you're short, just put your stop right here. They shouldn't be able to come back up through today's open. Electronic Arts, you did have what they call an in neck. It's not a reversal signal. It's usually just a bounce. Makes it very simple though. If it opens positive, you cover your short position. Then you re-short it if it comes back down through the halfway point of this candle. MABA as a short, would the logical support be at the $58 range? Is it worth the risk? I would probably guess that they're heading down here to test this level, which is, I guess, about the 57.50. Yeah, it's probably, well, if it opened lower, you know you have a bearish doji sandwich in progress. So you just stay short. If it opened lower and started trading down, you short it, and then you just use the open as your stop. It shouldn't come back up through that level. Stay long on this one. Bullish J-hook, which means the small caps are still heading lower. And ANET, evening star signal, gap down. Just stay short until you see a buy signal. Stochastic says you have more downside. CPST. You make sure there's hefty volume on this one. Right now, there's nothing there to get real excited about. If you're long, it has to open positive tomorrow to stay in it. If it opens lower, it just tells you the fizzle is gone out of this one. Under Armour, stay short. You can be shorting this one on weakness tomorrow. And XLNX, another one that you can go short on weakness tomorrow, which means they have to get below the T line, or I'm sorry, the 50. Got a gap to fill down here. Spectra, stay long. Notice how it used the T line as support. Still use the T line as your stop on this one. We did Salesforce, PXD. There was your dark cloud with a booster. Stay short. I'd be still going short on weakness on this one also tomorrow. The Canadian dollar backing off. Oh, I didn't look at the dollar. Did I? I didn't look at bonds. Geez, what was I thinking? Right now, very simple. They're going to move this one in the direction of how they open tomorrow. You're sitting right on the T line. Did we do Amazon? Amazon, use today's high as your stop. It shouldn't come back up through that level if you're short. And VASC, another one that has to open lower to stay short. If it opens positive, they're supporting right in here and at least bouncing back up to the T line. St. Jude's, you just stay short. Also using today's open as your stop. Kroger, same scenario with a hammer doji. They're going to move this in the direction how they open it. If they open it positive, pretty much tells us this level right here is acting as a support level. MKC, notice how they use the 50 as support. So this one has a different element to it. When they started selling this off after hitting the top of the trend channel, they could be coming back down to this level. However, there's your left-right combo. So that tells you have a J-hook pattern, which means they're probably going to be coming back up to test this level and going through because of the J. If this is wave 1 on your J-hook, wave 3 is going to break through this level. So if you're buying this one on positive trading tomorrow, just draw a line. I can do this. I almost know how to do this. So if I was buying tomorrow, I just kind of draw a line right up through the tops that if it came up here, then I'd watch with great interest to see what they were doing at that level. Hershey's not a very exciting stock to trade, but same scenario, bullish engulfing, J-hook type pattern. If it came up through the 200, at least you knew it was going to come back up here and fill this level or fill this gap. But Hershey's, an institutional trader, doesn't usually give you a whole lot of price movement. Today's candle on the nugget was a shooting star. Shooting star doji type day. Stochastics in the overbought area. So if they open this lower tomorrow, you definitely want to be out of the position. You've got a possibility of coming back and test the T-line. Worst case scenario is they open it lower, bring it down, and then if they bring it back up through this level, you can always buy it back on the uptrend. Silver Wheaton, same scenario. If it opens lower, they're going to do some backing and filling. And Coors, another one that if it opens lower, they're coming back to test the T-line. FTR, this one you should have been out of today. You were in the overbought area. You had dojis. Your stop would have been right here. That would have been a logical place to put your stop at the lows of these days. Because if it came back down through there, it was pretty much telling you this resistance level was acting as resistance. Tootsie Roll. There must be something going on in the candy world. Probably wouldn't be trading this one just because of the lack of magnitude of movement and it's sideways. I'd be someplace else. Apple, I'd be someplace else. It's just not doing anything. There's no trend to analyze, so I'd be trading something else. Constellation did almost get to the 200. If it opens lower, they're going to bring it back down to test the 200. Dow's down 103. All right. So right now, all we can anticipate is we're in a downtrend, obviously. STSH, there was your bearish Harami right smack dab at the 200. Gap down. At least your first target is down here, so it's got a little bit more downside, which is what the stochastics are telling you. So I'd stay short on this one. EXPO or EXPE, another one that's going to move in the direction of how they open it tomorrow. And Juno has seen a little bit of strength, but has not yet gotten back up above the T-line. So this would be a case where if I was short, I would have covered the short position, but I definitely wouldn't be going long yet until you see it close above the T-line. Let's see, TAYH. Yeah, bond prices still heading higher, which means interest rates are still heading lower. USG got whacked, but it didn't close below the T-line. So you need to see this open positive tomorrow. If it opens lower, it's probably going to test the T line. Then you have to see whether they're going to bounce it back up. Let's see. All the indexes are rolling over in various J-hook patterns. And as we can see in the futures right now, the Dow's down 111, which puts this still in that bearish J-hook pattern. The NASDAQ started that pattern on Friday with it rolling over and then gapping down. So if they open this lower, look for a bearish doji sandwich, which means they're going to have another big down day. The E-minis on most trading platforms is ES. On this trading platform, it's EP, and right now the E-minis are down, I guess, 14. Still trading lower. Let's see, Valentine's Day we're closed, so that means we're closed, what is it, Monday. Pandora, stay short, just nothing here. Trip, you stay short, but at this point I would use today's open as your stop. We did EXPE, we did Trip, we did Boot still in that kicker signal pattern. Still would suspect it's heading for the 200-day moving average after this kicker. And FIG, you can see this even with the best friend. If it opened lower tomorrow, I'd close it out. Then I just put my buy stop back up here, probably at this level, with the high of today, which is the close of Friday, that if they could bring it back up through there, then your best friend is still in effect, and that tells you they now are fighting to go through that level. Oh, is that right? Yeah, President's Day will be Monday. Sunday is right, yeah. Okay, with that, look for more downside tomorrow. Have your short positions on. We'll see everybody bright and early in the chat rooms. We'll see you